Hey team, two things I want to talk about today. First is Alex Becker. Second thing is a specific video that Becker recently made. If you don't know who he is, Alex Becker has been in the YouTube and internet hustle game for years. He's done a lot of different things, including founding and running a marketing company called Hyros, which helps track sales attribution. And I've never used Hyros, but it looks like a great tool, and he's probably made a lot of money with it, which he can use to invest. Becker's a funny one, and there are a few contrarian things that I really like about him. One is he's pretty unabashed about wanting to make gobs of money. Now, I know that sounds shallow, that we should all instead focus on really improving the world. But I've got news for you. One of the most effective ways of changing the world is leveraging riches. If you're rich enough, you can practically change the world by accident, for better or worse. Becker has a cynical tone about this, but the great philosopher king and Twitter's own human fortune cookie himself, Naval Ravikant, totally agrees.
So I believe the solution to making everybody happy is to give them what they want. Let's get them all rich. Let's get them all fit and healthy, and then let's get them all happy.
On November 1st, he posted a video titled, 5 crypto coins that will 15x in 30 days, urgent! Now, a lot of crypto YouTube will post titles that are non-falsifiable, like a question. If the title says, will these 5 coins go 15x, then they can't be wrong, really, they were just asking a question. But Becker makes a direct prediction with numbers and timelines. This is something we can test. He posted that video on November 1st. It's been well over a month, so how did he do? His general thesis was this. According to Becker, we're about to see a crazy rally in the market, similar to the end of 2017 and 2014. When that happens, everything, certainly everything in the top 50 coins, will go crazy, will just shoot straight up. And of those, the lowest on the list will make the most significant gains, because they need less overall capital to see huge growth. Still with me? Then, he points out the specific tokens he's interested in. They are Avax, Remark, Voyager, Phantom, and Luna. Let's talk about each of these briefly and then look at Becker's results. Avax you probably know. Avax is used on Avalanche, a smart contract platform that launched its own mainnet on September 21st, 2020. And in 2021, it exploded, going from $3.50 on January 1st to $134 at its peak in November, currently sitting at about $95. Remark is a very cool project. Remark is part of the Kusama blockchain, and the project aims to make NFTs interactive. Today, people think of NFTs as overpriced JPEGs, but in the future, in the mature metaverse, they'll have to be a lot more than that. Remark makes NFTs so that they can own other NFTs. So imagine that you have a character in a game that you control, and that character has inventory. So if you sold the character as an NFT, then the character has inventory NFTs that go along with it. Package deal. Pretty cool. Voyager. Voyager is a public company, and that's something that sets it starkly apart from most of the projects in the Web3 space. Voyager's mission is to provide every investor with a trusted and secure access point to crypto asset trading. They have an app for regular retail traders, and it's pretty solid. They also service institutional buyers and traders. Phantom. One interesting thing about Phantom's smart contract platform is that it's not a blockchain. It's a different consensus mechanism called a directed acyclic graph, or DAG. Directed acyclic graph. Holy cow. There's not too many of those. Hashgraph does something similar, but it's not as widespread as blockchains. But it does work. Phantom has about $6 billion of value locked in DeFi projects. And Luna, which is currently the 9th highest by market cap, which also does not match Becker's thesis. Luna is the native token for the Terra network, which launched in 2018 with the goal of combining the borderless benefits of cryptocurrencies with the day-to-day price stability of fiat currencies. One of the founders previously built a major e-commerce platform in Korea and brought that knowledge of real-world payments to the project. The other founder had worked as a software engineer at Microsoft and Apple and his own mesh networking startup. So, those are the cryptos Becker was recommending. After 30 days, how were the results? Not great. Against the US dollar, almost all of these lost value. Luna is the only token up at a 52% gain. Really good. The rest are down between 32 and 2%. As with all things crypto, it matters what you're measuring against, so let's look at the trade against BTC and ETH as well. It's better, but not awesome. Luna was still the real winner here, up 87% against BTC and ETH. Phantom did well as well, up 22% against ETH and BTC. But if CoinMarketCap is correct, then Remark doesn't even have a liquid trading market against anything but USDT. Avax was up a little bit, single-digit percentages, and Voyager is down between 16 and 17%. Becker's prediction was just flat wrong. The results bear no resemblance to his prediction, but I'm not sure I can blame the guy. We're in a market downturn right now that I don't think anybody saw coming. Everything is bleeding, including the top coins. Most market analysts I've seen are pretty surprised where we are right now. As it turns out, the future is incredibly hard to predict, especially in the near term, especially on projects where you're on the outside looking in. I don't blame Becker for being wrong here. Most people, most traders, even really good traders, will be mostly wrong most of the time. And Becker himself knows that. He says that with microcaps, risk is when you're in the market for an extended period of time. That's the opposite of the major market cap coins like Bitcoin and Ethereum. For that crowd, it's all about hodling. For microcaps, hodling is the worst thing you can do. I think Becker's right. Get in, get profit, get out. In this self-same video, he talks about something called asymmetric risk. That's not the phrase he uses, but it is the idea he's talking about. And it's an important lesson to learn in investing. When you're considering the future price of something, there are a couple variables to consider. First, which is more likely, up or down? Second, for each of those directions, how much, how far up and how far down? When you see a situation where the potential loss doesn't look like that much, but the potential upside is huge, that's a bet you play all day, every day. It's how you win in the long term, asymmetric risk. Think about it. If there's a 10% chance things go up, those don't sound like very good odds. But if that uptrend is going to take you 1,000x up, you take that bet. It doesn't matter if you lose at first. Play again. Play over and over. That kind of bet will pay off. The downside is more likely, but tolerable. The upside is less likely, but huge. If the upside is big enough, you really only need to be right once to win big. In this instance, Becker was wrong about his basic premise, that we were ramping up to a blow-off top to the overall market. Maybe not wrong, maybe he's just early. I think we're still in a bull market. We're still headed north, and we'll probably see some mania before all this is said and done. This is exactly what happened at the end of 2017 and the end of 2014, the last bull runs. Now, 2 data points aren't really much to make a future prediction from, and this is presuming a 4-year cycle for the whole crypto market. This has been a popular idea that the market moves in 4-year cycles. 4-year cycles apparently happen often enough in conventional asset classes, and it lines up pretty well with Bitcoin's halvening, which reduces issuance of the dominant cryptocurrency, something we can talk about in another video. Suffice it to say, Becker was off on his timing, as were many, many others in the space. My personal belief is we're seeing lengthening cycles, something another YouTuber, Benjamin Cohen, has been advocating for a long time. He's a technical analyst, and what he means is that it's just going to take longer than 4 years, and Becker is early. We'll see lower multiples playing out over longer periods as the cryptocurrency asset class matures. There are still huge gains to be had, but as always, there are no easy wins. You have to be smarter, better, faster, stronger than the other players, and that just ain't easy. So, am I saying Becker is an idiot? Not at all. I like the guy. I think he's a sharp trader, certainly in the specific kind of trading that he does. But let this be a lesson. There are no guarantees. The smartest people in the room can't tell you exactly what will happen in the near term, and very smart people disagree sharply on what the distant future holds. Don't just trust somebody outright because they sound smart. Not even me. I'm giving you my opinion, but you ultimately need to form your own from experience and research. In case you didn't know, there are a million different ways to make money in the world of cryptocurrency, but for any single one of them to work for you, you have to do what Alex Becker has done. You have to understand yourself, your interests and abilities, your real goals, how you'll really behave when things get hard. Becker is playing small market cap gaming tokens. Other people will have completely different strategies and philosophies. Maybe they invest in NFTs or lend NFTs or do airdrop farming or staking or mining, which can be totally different depending on which coin they're mining and what resources are available to them and whether they're investing for near-term gains or long-term growth. It's all about how you play and how focused you're willing to be. And know this. The map is not the territory. At the end of the day, you have to figure out what makes sense to you, what map of reality matches your own observations. And when you have new inputs that conflict with your old models, be ready to update that model, that map of reality. Ultimately, all models are wrong, but some are useful, and you decide which ones to use. I hope that's helpful. What do you think? Should we break down the predictions of other YouTubers? Do you want to hear about the different money-making games that people play in the cryptocurrency space? I don't mean literal games, though there are certainly those too. I mean mining, staking, trading, how people are making money from day-to-day small market cap coins to dollar cost averaging and hodling. What do you think? Let me know down in the comments, and we will cover it all in a future video. Thanks, team.